All right, learning objective 3. Here we're going to discuss how we classify costs that are relevant to the service, merchandising, and manufacturing companies. Let's talk about a couple of different types of cost. The first of those is considered a product cost. Okay, when we mention product cost, we are talking about costs that are specifically tied to the manufacture and production of our inventory. And as we mentioned earlier, these costs will remain on our balance sheet as an inventoriable product cost until that merchandise is sold or the product is sold. Then it will move to the income statement where it will be considered cost of goods sold. And the cost of goods sold will there be matched up appropriately with the revenue generated from selling that product. But until they are sold, they are a product cost. And we have a couple of different product costs. They can first be broken down into direct and then indirect. And direct costs are simply as it says. These are costs that can be traced directly to a cost object. If we are manufacturing windshields, the glass is a direct cost. We can trace exactly how much glass went into that windshield. Now, indirect costs are those that are not easily traced to an object. So if we use glue to somehow put that seal around the windshield before it goes into the car, we might consider this an indirect cost because do we really want to track the exact amount of glue that was applied to every windshield to put the seal on it? Now, John's company might say, yes, we are computerized enough and we have enough technology that we know exactly how much glue went into that windshield. I want to trace those costs directly to the cost of the windshield. Great. It can be a direct cost. On the other hand, if it costs you more than it's worth to track the amount of glue that went into each individual windshield, we'll just consider it an indirect cost. Hence, once again, we see there's no golden rule. Different people, different organizations can do it differently. In the end, whether it's direct or indirect, it becomes a part of the cost of the windshield. Those direct costs that are traced directly to a part, such as the windshield, obviously include direct materials, but they also include direct labor. And so the person who is directly responsible for moving that windshield into place, or the person who is responsible for managing the equipment that is moving that windshield into place, would be considered our direct labor. I can trace their labor to the exact product that they are working on. But what if I have indirect labor, the supervisor in our manufacturing facility who actually works out in the plant? He may not be, or she, hands-on exactly to the windshield, to the glue, to the sealant, but they are supervising the process that is taking place to manufacture that windshield, and so they would be considered indirect labor. So those indirect costs that are not traced directly to a cost objects are either indirect materials, indirect labor, or any other cost associated with manufacturing your inventory that we cannot trace directly to the product. And all of these costs, these indirect costs, will end up in an account that is called manufacturing overhead. So if we take a look a little more specifically, as we said, direct materials, the raw materials such as the windshield used in the production. Direct labor, the person who is actually physically handling the glass and moving it into place, or managing the machine that is moving it into place. On the other hand, the manufacturing overhead is going to be, as I mentioned, the indirect materials, the glue, the indirect labor, the supervisor. Now, if you'll take a look at some of these, what we are discussing in this prior slide are particularly the product cost. Once again, what did I tell you about these product costs? They're inventoriable cost. They will end up on our balance sheet because our inventory, the cost of our inventory, stays on our balance sheet until we sell it. And so if you'll, once again, what are those costs that end up on our balance sheet? Material, labor, and overhead. And as material is combined with labor, is combined with manufacturing overhead, remember in our prior objective, we have raw materials that become work in process. And as more material and more labor and more overhead is added, that work in process becomes a finished good. All right, so product costs are made up of materials, labor, and overhead. Our inventory can be made up of the cost of raw materials, the cost of work in process, the cost of finished goods. They all tie together. And this graphic gives you an example of what is the difference in a product cost versus the period cost. Well, what is a period cost first? Your book says this is a selling and administrative cost. Period cost, if I can write with this little pen, are on your income statement. Okay? Product cost are on your balance sheet until they are sold. After they are sold, they will move over to the income statement as cost of goods sold. But period costs are those costs that as we incur them, they end up on our income statement immediately. They never hit the balance sheet per se. Okay, and so we'll look at some. Depreciation of manufacturing equipment. Yes, the key word here is manufacturing equipment. It was used in manufacturing our product. It is a product cost. Now, depreciation on office equipment, that wasn't used in the manufacturing process. It is part of selling our product. Hence, it is part of selling and administrative expenses, which are period cost. Advertising, once again, part of selling our product. Property taxes and insurance. If they're related to our office, they're a period expense. If they're related to the manufacturing process, they are a product cost. Okay, the production supervisor's salary, key word, production. It is part of manufacturing our product. It is a product cost. The CEO, as important as he or she is not hands-on the manufacturing process. They are a period cost on the income statement. Wages for assembly line workers, here's the key. Okay, they are tied directly to our product, direct labor. Batteries, processors, other materials. Okay, here we're calling these specifically direct materials. On the other hand, if we have some manufacturing supplies that we can't trace directly to the product as a direct material, then we're going to consider it manufacturing overhead. Freight in. Okay, once you have to remember, freight in is part of the cost of our inventory. Delivery expense is not. It is related to sales and will go immediately to our income statement. So I know I'm throwing lots of words at you from balance sheet to income statement. So let me just show you if I can maneuver out of here for just a moment. Let's take a look at an income statement so I can show you what I'm talking about. Here's an income statement for a company called Monsanto. All right, we see their net sales on income statement. Sales less expenses equal net income, right? We see sales less cost of goods sold. These cost of goods sold were on the balance sheet as product cost before they moved to the income statement as cost of goods sold. So we want to see sales less cost of goods sold to get to gross profit. How profitable am I on selling and manufacturing my inventory? But then we have some additional operating expenses. So here we see selling, general, and administrative expenses. These are the period expenses that we see on that slide. Okay, these are the expenses that have nothing to do with manufacturing our product. They are the administrative and selling expenses that come after the product is actually manufactured and ready for sale. Okay, so if we wrap this up, if we look at prime cost and conversion cost, some new terms here, we're still dealing with material, labor, and overhead. But when we're talking about prime costs, these are the cost of direct material and direct labor. Okay, so I have the direct materials in-house. They're going to be raw materials in my inventory. I begin to add some direct labor to them as I move them into work in process. Okay, and as I move them into work in process, it's their phrase that's familiar to you here. I am beginning to convert them to a finished good. So the process of converting my raw materials into finished goods means that there's some conversion taking place in work in process. Okay, so as I have my direct materials, my raw materials, I begin to add some labor to convert them to a finished product. I add some overhead, my supervisor's salary, the glue on the windshields, the depreciation possibly that's taking place on some of those machines. All of these costs together will help me to generate a finished product. All right, so I have pulled sample exercise 18.8 from the end of your chapter so that you could see an illustration of, can we actually identify manufacturing overhead? What did we say manufacturing overhead costs were? Indirect material, indirect labor, those things that we cannot trace directly to the product, but they are related to manufacturing the product. Okay, so you guys think about it. Glue for frames. Do we need glue to manufacture our frames? Yes. Is it a product cost? Yes. And is it indirect? When we say indirect, part of manufacturing overhead? Yes. Because are we truly going to directly trace the exact amount of glue to each set of frames for the sunglasses that we're manufacturing? Probably not. Indirect material, manufacturing overhead. All right, look at depreciation on company cars used by the sales force. This is our key. This is not an inventoriable product cost, so it cannot be manufacturing overhead. It's on the income statement as a period cost. What about plant depreciation? Yes, this is key. The property, plant, and equipment that we are using to manufacture the product, we may not know exactly how much depreciation from each machine goes to each product, so it can be included in manufacturing overhead. Interest expense? No. Manufacturing has no control over how the CEO or the chief operating executive decides to finance the purchase of our building or our machines. Okay, this is a finance cost. This is not part of the cost of manufacturing our inventory. Lenses, that should be part of inventory. Yes, it is, but it is a direct material. It is not part of manufacturing overhead because it is a direct material. Okay, what about the company president's salary? Not tied to manufacturing. What about the plant foreman's salary? Yes, and we see that here. The plant foreman is someone who is directly involved in the manufacturing process. Okay, now let's compare that to the plant janitor's wages. Yes, he is in the manufacturing facility, keeping it into a workable, operable environment. So the plant janitor's wages, they are also part of manufacturing overhead. Now, the janitor for the office space, not so much. We are separating the cost of manufacturing our product from the cost of operating our business. Oil for the manufacturing equipment. Okay, we would say that this is related to manufacturing our product. And if we can't, and if the oil is going into the equipment, and if I've already said that equipment is part of overhead, I can't trace the depreciation of my equipment to a particular product, then I probably can't trace the oil that's going into that equipment to a particular product. So we lump all of those things, indirect material, indirect labor, indirect material, into a total manufacturing overhead account. And as we progress through this chapter, we'll talk about how do I allocate that manufacturing overhead back to the individual products that we are actually manufacturing.